Hello there, folks. Welcome into this four-piece here tonight. 4 videos for me to react to. First one up here, Tom Lee. He says this is the time to get into FANG. We're going to hear what our favorite bull, Tom Lee, has to say in this one in the first of these videos. Second video up to react to here. There's a lot of stocks selling at attractive valuations, says Cam Dawson. Hear what she has to say, where she finds deals in the market. Always got to give a shout out to Cam. Then we're going to get maybe a little bearish, okay? Got to put a little bullishness in there, a little bearishness. The odds for Apple favor a decline, says Mr. Short Hills Capital, Steve Weiss. I don't know. I haven't heard from Mr. Short Hills in a little bit. He's popped out, so hear what he has to say. And then last one, Jenny Harrington says Amazon probably saved the NASDAQ from a bigger plunge. Does she think things have bottomed out now, or does she think this is just a short-term thing? So looking forward to hearing her opinion. So appreciate y'all joining me as always. Thank you so much for being here, folks. Thank you for being subscribed to the channel, and I hope you enjoy this 4-piece here today. I did buy stocks here today, including a brand new stock. If you want to join 1,411 members and check out my Patreon, that's the pinned comment down there. You can see exactly what stocks I'm buying and selling each week and exactly how I build a portfolio. And then shout out to everybody on this channel that's been watching over on Twitch. Let me know in the comments section if you guys have been watching the Twitch and you've been enjoying that. I love to hear from you guys as always. I don't know how many people on this channel are actually watching over there on the Twitch, but we had some pretty huge streams this week, and next week's going to be even bigger. Some of the stocks report next week. So yeah, appreciate y'all joining me over there. Let me know in the comments if you watch. Alrighty, let's get into this.
I mean, this has been a victory for those who've been bearish. But to me, this is also a reminder that the stock market and investor views about equities really depends on FANG. You know, FANG didn't do well this week in earnings, and it really sort of took some of the support out of stocks.
Wait, what? What are we talking about? What are we talking about, Tom Lee? Excuse me, Mr. Tom Lee. Sir, no. What? Tom Lee, have you ever read an earnings report before? Have you never done that before? Like, just do you not understand how an income statement works, Tom Lee? Like, what are you talking about? Those earnings were freaking amazing. I don't care who you look at. Microsoft was a grade A. Meta was an A+. Google was a grade A. Those earnings reports were phenomenal. Amazon was an A+. You can't say anything bad about those earnings reports from the big dogs. Like, come on, Tom Lee, that was just a ridiculous statement. Their stock prices didn't do well, but when you talk about their earnings were bad, no. I mean, that's just a ridiculous statement.
But to me, this is also a reminder that the stock market and investor views about equities really depends on FANG. You know, FANG didn't do well this week in earnings.
They did do well. They did amazing. Some of the support
out of stocks. Do I think the FANG thesis is changed or broken? I mean, I don't think so. To me, if someone hasn't owned FANG all year, this is a chance to get in.
But the thesis can be intact, right? That these are the places you want to be. You can have that while still saying, you know what, the stock's got too stretched and their valuations got too rich, and now it's time for a pullback.
Yes. I mean, you know, we're down 10% from the highs for the S&P, so I think a lot of bad news is baked in, but we've also done, as you point out, a lot of technical damage, and people don't like the 10-year at 5%. I mean, this is why next week is pretty critical, because we do get some pretty important data points.
I mean, momentum's a dangerous thing at times, right? I mean, you can say, well, it can carry you when the times are good for these FANG names, and that was one of the criticisms the whole time. It's 7 stocks, and 493 stink, and then now it's 493 still stink, and the 7 look dicey. That's a problem.
It is. I think there is some good news. You know, I think this week there has been some improvement in the internals of the other 493. We did a report even last night about how the small caps are starting to look a little stronger. So I think the 493 is less bad. And in terms of returning capital and compounding capital, the FANG story is strong. So you're right. I don't know if the market's comfortable with the multiple now, but in 12 months, I think they're great opportunities.
Is this a cautionary tale about where earnings expectations have gone? That's been the big debate. Now we're out of the earnings recession. We start to get liftoff, and then we get higher and higher as you turn the calendar into next year. Do we need to rethink where we are? Because we're worried about the economy. Rates are high and may remain such.
Yeah, I've got a contrarian take on earnings. Number one, if you look at the stock market reaction of those that beat, they're up 0.5%. That's better than Q1 and Q2 of this year. So actually, we're getting better reactions. It's just like you said, it's more in the 493, not the FANGs. The PMIs have turned up year over year, and historically that leads to earnings growth year over year. So it's confirming that earnings should strengthen from here. And if we look at even Q3 earnings, they've actually gone up 2% since the start of reporting season. So I think the FANG's disappointed in terms of market reaction, but the rest of the market's actually been okay. And I think that is what's going to help us get through the rest of this year.
I just wonder if there's a counterintuitive way to look at that. So PMI is good for earnings. However, the Fed doesn't necessarily want all this to be good, right? They want demand in some respects to start to slow down, and they've been unsuccessful in getting it to do that. So as they potentially step up their efforts to make demand slow down, that potentially hits earnings, doesn't it?
You're right. I think there is a view that the Fed is running out of patience. They're like, look, when are we going to break the economy? But I think maybe the more subtle point is I think the Fed would like to see the labor market slow down, because we know underlying the two big drivers of inflation are housing and autos. They've slowed, but the job market's still strong. Next week is the jobs report. If it's
Man, I just got back from Lake Las Vegas. I got done work a little early, and I was like, let me go out to Lake Las Vegas, and the weather's still really nice here in Vegas. I mean, I guess you could make the argument that it's pretty much always nice here in Vegas. But, yeah, I saw something that was not too cool. My favorite chocolate shop, man. My favorite chocolate shop did go out of business. They did indeed. I always stop at this chocolate shop when I'm out in Lake Las Vegas, and there's not many businesses in Lake Las Vegas that are staying around. And this is one of the very few. And I would always go in there, even though the chocolates were way overpriced and it was super expensive. I would go in there literally just to keep the lights on. So if I could spend 20, 30, 40 bucks in there, I would do it. And I was hoping to go in there today and buy some chocolates to spend 20, 30, 40 bucks on some overpriced chocolates. But unfortunately, they did go out of business. So, I knew I was their only customer, man. I figured I was probably the only one keeping that place afloat. And unfortunately, they did go under.
Soft, I think that takes the edge off. And of course, next week we get the FOMC meeting. And again, I think that they're going to be patient, because a lot of tightening, especially 5% 10-year, is already going through this pipeline. So I think the Fed can actually be patient.
Sure, but no. Now, I agree with you that the backup in rates has given them the flexibility to be patient. It suggests that, well, the move in rates has done some of the work for us. However, if the labor market starts to show softening, then we have to worry about what's been the whole key to this thing to begin with, and that's the consumer remaining strong. Job losses pick up, spending goes down, the soft landing story starts to unravel, doesn't it?
It's a delicate balance, because, you really want to see jobs at 100,000 a month, and you want to see wage expectations cool off. So it's a tricky calculus, but I think that we don't have to reflexively say, hey, if the job market slows down, we're headed for a hard landing. That might be the market's reaction, but then that ends up being an overreaction.
You're still a Bitcoin bull?
Yes.
I want to end our conversation on that, because I think it's the best performing asset class of the year.
Yeah.
Certainly one of them. It's up more than 100%. So what's your view of it here? And why has it been going up the way it has been recently?
It's a good question.
There's a couple things. One is it's been real buying. So there's real money institutional buying. We can see it in the CME volumes at all-time highs. Mm-hmm. And we know Asia has been buying again, and they've been absent. So this is true people wanting to get in. It's been a good sound money story, especially as we worry about Washington.
ETF optimism, too? Is that where you're going to go also?
Yeah, the ETF, I think, is far bigger than people realize, because, again, supply is going to be only 12 million a day after the halvening. ETF could be $100 million a day of demand.
Yeah, I've always had a view that Bitcoin has one big last leg lower, like one big last suck in of everybody, and then the heavy drop to like 10,000 or something like that. I don't know, just always been something I kind of like, I could see that happening, like one last big suck in at everybody, and everybody thinks, Bitcoin's going to the moon, and then just gets pummeled, right? And then you get every last soul who's only believes in Bitcoin because of it going up in value. You get every single one of those out, and you get only the true believers of Bitcoin left at that point in time, if you could get one last big, huge flush. Alrighty, next one up here. There are a lot of stocks that are basically selling at attractive valuations, says Cameron Dawson.
Talk of the tape.
By the way, I can't freaking believe that Tom Lee got me that fired up. at the beginning of that video. Holy smokes, Tom Lee. I'm shocked. Like, I expect that from Mr. Short Hills Capital. But not Tom Lee. Wow.
The week ahead bring with Apple on deck, the Fed meeting in focus, and probably so much more. Let's ask Cameron Dawson, Chief Investment Officer for New Edge Wealth, with me here at Post 9. It's good to see you. Welcome back. As I said, a ugly end to a pretty rough week. What do you make of it?
Yeah, it would have been nice to see a healthier bounce, mostly coming out of yesterday, where a lot of the indices got short-term oversold. We saw the RSI hit oversold levels. Some of the breadth measures looked a little bit washed out. So to see even more selling into that just suggests that there's more digestion to come. And the reality is that in the near term, we've been setting up this series of lower highs and lower lows, and that isn't showing any signs of turning yet.
Are you giving up on the idea that we could have a late year rally, or is it too soon to do that?
I think it is too soon to give up, but of course, the lower you start the rally, the less likely that you get back to the prior highs that we reached in July. You'd have a much more room to go. But the reality is that we've seen these bounces, and clearly after a day like today, we could see another bounce like we had in early October, but they've been rather tepid. So I think we're still in the mode of you have to judge the bounce as it comes.
So what do you make of what's happened in tech this week? I mean, it was the biggest question going in, along with where rates were. Big part of the thought was, okay, rates can remain a little bit elevated as long as mega cap comes through and delivers.
Yeah.
I find that we end the week not really feeling great about where mega cap is, and rates are still elevated. So where does that leave us?
Yet compared to the rest of the market, tech is holding up okay. On a day like today, we see that tech is almost back near its relative high versus the S&P, which is surprising.
You know, that's the thing. All these guys beat. It wasn't just that these companies beat. Several of those stocks beat huge. It wasn't like, oh, that's just a little, you know, they beat by a little bit. They beat massive. I'm thinking Meta and Amazon specifically. Microsoft had very impressive beats as well. Google very well as well. But Meta and Amazon were borderline shocking beats. Borderline shocking that when I saw Meta's numbers, I lost my freaking mind. Everybody that was on the Twitch live stream, you got to see that firsthand. I lost my mind. And then almost lost my mind when I saw those Amazon numbers as well. They were both phenomenal.
Giving this rates back.
I mean, I told you guys, they're going to both kill it. They're going to smash numbers. Sure enough, they smashed, but they smashed even more than I thought they would smash.
We think one of the reasons this is happening is people don't want to sell their tech because they're probably sitting on big gains this year. Mm-hmm. So you may be less likely to take gains into the end of the year, maybe waiting.
I believe it's something else. I believe the reason these folks don't want to sell some of these stocks is because they realize they're an absolute idiot if they sell them these stocks. Like you're really going to sell Meta at what are we trading at? 17 forward P, realistically on what they should report for next year's numbers? You're going to sell Meta at that? You're going to sell Amazon right now after that ridiculous quarter they just had, knowing another ridiculous quarter is coming up next year? You're going to sell Google after that quarter Google just put up? You're going to sell Microsoft when every quarter they come in and smash the numbers? I mean, just think about these things for a moment, okay? So I think it's way deeper than like, oh, you know, I don't think they want to sell their gains. I think it comes down to just like, you're crazy. Like, are you wild? Like, okay, so you can hope to try to time it out and get the stock for cheaper, but it's just a silly strategy to sell insanely great companies that are very attractive valuations, if not very undervalued, when they report the sort of numbers these companies report quarter in and quarter out.
2024 to do that.
Although there is a view, and I mean, there's action, not just a view. I've talked to some investors, whether on Halftime or elsewhere, who are buying the dip.
Yeah.
I mean, we've seen it. You know, Alphabet sells down hard. Stephanie Link comes in and buys it. Steve Weiss, he's not real positive on the market, but he buys some of these mega caps too.
Mr. Short Hills?
Meta, Microsoft, and others are doing the same.
Yeah, they're great companies with actual earnings revisions going higher compared to the rest of the market where we're starting to see some earnings revisions turn lower. The biggest question going into 2024 is you have a name like Amazon, which has had earnings go up 350% this year. That slows to 30% next year. What does that second derivative slowdown mean for the performance of the stock? But at the end of the day, these are great companies. Valuations are far more reasonable today than they were back in July, which is likely why some people are saying it's a good time to step in.
A lot of the commentary over the last few weeks, utilities, it's a total disaster. Staple stocks not doing anything. Obviously, we have a little sign of life now because the market is feeling a little upset. Is that just what it is, a moment, or is it something to build on, you think, for those areas?
We're still technically in downtrends on absolute and relative basis for utilities and staples. So we're seeing a bounce, but we still need to see evidence that there is a sustained turn in relative performance. If that happens, and if utilities and staples really start outperforming the market, that's a sign that growth fears could be coming back. And one of the questions we're asking ourselves is, are we at peak growth? Look at the GDP print from this week, 4.9%. Can it get any better than that? And is that maybe what utilities are sniffing out?
If I feel like I need to play a little defense, where do I do it? Bonds? I mean, is that the most obvious choice? They still super cheap relative to where stocks are?
If you really want to play defense, you're playing bonds within the shorter end of the curve, because you still have the risk within bonds that yields could move higher on things outside of just the economic cycle, that supply and demand factor of what.
So there's some people that believe the GDP numbers are cooked. Cooked. Okay? What do I mean by cooked? Basically meaning they're made up, basically believing they're manipulated, things like that, okay? I have no clue. You never know. I don't always trust the government as much as the next guy, but you never know, okay? I think a lot of times it's important to ask yourself, do you think the economy really grew like that, right? And, I mean, there's certain segments of the economy that are really bad right now, right? Autos, anything you got to buy with a loan. Anything that's a big credit type purchase, those are all horrible right now. Horrible, right? But then you look at smaller ticket purchases, right? Texas Roadhouse just grew revenue double digits year over year, right? Chipotle certainly reported a phenomenal number in their earnings, right? You look at Amazon, you look at what's going on with their e-commerce business, that looks really strong right now. Their advertising business looks really strong. Meta looks really strong. Google looks really strong. So you look at a lot of these companies and you're like, I can see why the GDP number was very good. So that's where you get in this conflicting story of like, what do you think? Now, do remember, 2022 was a bad year for growth. You do remember we actually had a recession in 2022. No one called it that, but technically we had a recession, 2 straight quarters of negative GDP. So 2022 was not an exciting year at all. So do keep in mind when you see this year's numbers, it is coming off of last year's numbers, right? Which were not impressive whatsoever. So just a little food for thought.
Within treasuries that is impacting the long end of the curve. TLT continues to struggle, and yet you still see big, huge inflows into long treasuries. So people are trying to catch this bottom. It hasn't worked yet. So if you're playing ultra defensive, that cash-like is likely the best place to do it. However, we would argue that there are a lot of stocks that are now trading at extremely attractive valuations. Look at the equal weight S&P 500, just 5% above its October 2022 lows. So you're already seeing that washout in valuations in large parts of the market that still really have good fundamentals, even if we see growth start to slow a little.
Yeah, so I definitely appreciate all her thoughts there. I don't really have much to add to what Cam was kind of talking about there. I just think Cam's looking a lot of backwards looking stuff on kind of what's going on in the market. And I think that's what a lot of Wall Street gets caught up into in terms of like what happened this past week, making judgments based upon that, technicals. You got to look a little forward, right? Because you could have looked at the market 2 weeks ago and made very different judgments than you're making right now, right? All right, next one up here, Mr. Short Hills Capital. Let's hear what you got to say about Apple.
You do employ a similar strategy at times to what Kevin does. How do you assess where tech is right now after it was a pretty turbulent week, and now we have Apple in front of us, and then in a couple weeks' time, we're going to get NVIDIA. But where are we today as we head into that next week?
January through the end of July, stocks were firmly in the driver's seat against bonds, and within stocks, it was all about tech, right? We see all that about the 7 stocks outperforming the other 493. But then all of a sudden, as the bond market started to wake up and say, hey, maybe stocks are right, and we're not going into a recession, and we have all of this fiscal spending that's now baking itself into the economy with the IRA, with the ARA, that the bond market all of a sudden woke up and agreed with stocks and now is uninverting. And so what you've been seeing, what we have all been seeing really since August, is the bond market's been firmly in control. And I think, Steve touched on it, but none of us focus on weekly bond auctions. Like, it's just not something that we do. But you're continuing to get signs that, I'll say the three biggest players, the Fed, the Chinese, and hedge funds, are either sellers or short of treasuries. And so I think that until that settles down, that is going to be a headwind to stocks.
Boom, boom, boom. 100%, okay? Absolutely, she's right on about that. Until we get the treasury market to settle down and get at a place that people are, the masses, and when I say the masses, I'm really talking about the masses of hedge funds, in institutional money, active managed money, when those folks feel like treasuries are finally at a spot, not necessarily where they're going to start going down, but where at least they're going to stay flat at. That's going to be a very important point for the market, and we could get there in the next few weeks. We could take months to get there, okay? We will eventually get to that place, but, there's a process to go through to get to that place.
Say, though, when you look at the numbers that came out this week, Microsoft crushed it.
Thank you.
Not only in tone, but in delivery, as they're using OpenAI inside of the company. And then obviously, Copilot's just going to be huge. And I think Amazon is also a really great story of, has Andy Jassy finally got his sea legs? And so I think what I'm seeing is an idiosyncrasy building up with these individual names. And I think Apple probably is going to be more like a Facebook or a Google versus an Amazon or a Microsoft. So I think that we're going to still see dispersion of returns within these names. But until bonds settle down,
I agree with that.
I think that we all have to buckle up and know that volatility will
I don't think you can't put Meta into the same category as Apple. You really can't. In all due respect, Apple is having trouble. Apple's revenues are going down, literally. Their revenues are going down. Meta just grew revenues 20+%. Meta's revenues are Meta's profitability is skyrocketing right now. Apple's lucky if they can keep their net income the same as it was last year. Lucky if they can keep it the same. Whereas Meta, you got it rising triple digits, that bottom line, right? So in all due respect, don't put Apple and Meta into the same sentence, because one of those companies is having trouble even growing their business and the other is growing phenomenal, and the other is trading at a much cheaper valuation, which is Meta versus Apple, right?
Apple puts, right? You concerned about what's going to be delivered next week?
I am. I don't know how much of an impact the 15 launch will be, because it really happened, a lot of it after the quarter. But I just can't imagine that the commentary is going to be good with what's happening in China, right? We're seeing Huawei.
Oh, Tim Cook's the biggest pumper on Wall Street. Tim Cook's the biggest pumper on Wall Street, sir. Have you ever listened to an Apple conference call before? There's no bigger pumper on all of Wall Street. I kid you not. Not even Jensen Huang and NVIDIA. No one is as big of a pumper as Cook is, okay? That man's going to make anything sound good. Oh, 15, the demand's incredible, this and that. Give me a break, okay? I've listened to so many Apple calls last 10 plus years. Believe me, Cook will pump it.
Pick up share, and the government came out and said, to the government entities, don't buy Apple phones.
If Cook doesn't pump it, things are really bad at Apple. That's if he didn't come out and pump, it's really bad, okay? Because that man is a master pump.
And we're seeing them shift their supply chain to India. There's a reason they're doing that. So
Tim Cook himself was over in China, we're told.
Exactly.
Recently, right?
Yeah, just a couple of weeks ago, if not last week. So I think it's kind of troubling. Plus, it's overvalued. And they have not shown over the last few years the growth. We're seeing also the growth in their non-hardware business, and of course they're asset light, but in services also declined. So I don't know, other than it's the ultimate market proxy because of its weighting, which albeit it's been reduced over the last year in the indices. To me, there's no there. It's a quality brand. It's a great brand. But, it doesn't deserve to be where it is. So I think the odds favor a decline.
Yeah. I wish I could agree with that fully. But like I said, Tim Cook's got a way of pumping it. You always got the Warren Buffett kind of bottom on the stock, right? Because Buffett holds so many shares and he just seems like he's not going to sell anytime soon. Plus, Apple's always buying a ton of their own stock back, right? remember Master Pumper, he's always buying his own shares back like insane there at Apple. So I wish I could say, yeah, Apple's going to tank, but I don't know, man. We'll see. We'll see. Are Apple's numbers going to be great? Heck no. Heck no. But that doesn't mean its stock price is necessarily going to go down. Amazon probably saved the NASDAQ from a bigger plunge, says Jenny Harrington.
A good amount today. There you go, by about 130 points. S&P hanging positive, but there's the NASDAQ, Weiss, getting off the mat, picking itself off the floor. Thank you, Amazon. Rates have stabilized a little bit. We're at 485 on the 10-year. The data's a bit mixed. How do you assess what's been a really difficult week? Utilities are the best sector. That tells you everything you need to know, doesn't it?
It does. We'll see how long that can last, because I think you're going to see the yields move up again, absent an expansion of the conflicts in the Middle East. The reason I say that, if you look at the Treasury auction, I think it was on Tuesday, it was kind of punk, right? And I think that's
curious if the public account was up or was down here today. Let me take a peek. I'm assuming up. Let's see. I'm gonna throw it on the screen for you guys here. We'll see if the public account was up. Ooh, it was up. Anybody want to take a guess at how much? It's been a brutal past kind of week and a half to 2 weeks, I'd say, for the public account overall. Pretty nasty is the best way I could put it. Pretty nasty. But let me go ahead and send this through. You guys can see what the public count was here today. Here it comes. Here comes the airdrop. And I'm not talking Air Jordan. There it is. Up 12,000, but man, we're a long way to recover. I mean, this account, I feel like just a week and a half ago, 2 weeks ago, I think we were at about 177, I want to say, or 175. So that's a very quick, like, let's say $200,000 drop or so in a matter of maybe 2 weeks. So pretty darn vicious.
Continue to be the narrative going forward. That's going to pressure rates. Look, the market was due for a bounce, and Amazon was as good a reason as any. Plus, I think in reflection on Meta's earnings yesterday, which I thought were pretty good, I thought they were actually great, that the market said, hey, we can pick and choose here. But in my view, this is just a momentary respite. That the die is cast, the economy's going towards recession. I think some critical companies in the earnings reporting season have missed badly, and the market is just punitive. Underlying volatility in single stocks is just the largest I've ever seen, the highest I've ever seen. So I think that gives caution. And as I've said many times recently, the risks outweigh the rewards, and there's a time to play and there's time to wait, because your return is definitely defined by your point of entry.
Yeah,
this is not the point of entry.
You're playing a little bit more, though, than... Yeah, look, you bought more Meta.
I did.
You bought more Microsoft.
I did.
Right? Yesterday.
Yeah.
As those stocks had, obviously had some troubles, even with decent earnings, it's in Microsoft's case. And you have Amazon, too. So it's not like you're running for the hills. You're actually getting a little more.
He's running for the short hills.
In the biggest names.
Sounds like Mr. Short Hill's going bullish.
Let's go wider in the portfolio. So yesterday, I was actually net short yesterday. Not necessarily at the beginning of the day, but going into the earnings for Meta, I was short.
Through the Qs, right?
Right, through the Qs. I was short. Multiple call on Meta. I was short. The 30s, the 37s, the 42s, or whatever. So look, they didn't offset the loss there, but it was unbelievable trading. I got into Meta. I traded it yesterday. Got in way too early. I got in when it was only down 6. And then thought I was a hero, and then it's down 18. So I really loaded up, down 17, sold part of that. But now my position right now is double what it was going into yesterday. So there's opportunity in terms of Microsoft. Shouldn't be down at all. Trade down with the market. As I've said, and as their earnings bore out, this is the number one play in AI. So I'm happy to take on idiosyncratic risk on fundamental stories from bottoms-up analysis, but not willing to take on broad market exposure. I don't have to.
Jenny, in terms of Amazon, I mean, it's been a tough week. Let's focus on mega cap. I think that's where people really need to know what's happening and what may happen from here and what the broader implications are for the overall market. Did Amazon just save us, the NASDAQ, from a bigger plunge that seemed to be putting itself together?
Maybe. I think probably. And I'm thinking about the conversation we had a couple days ago where you said, are these guys tired? And I said, they're exhausted, right? So when you say
I
a bigger
reacted to
plunge,
that one.
probably yes, but what does that mean from here? I don't think if it saved us from a bigger plunge, I don't think it means that it's going to, reform a bottom and we're going to have a huge move up, because when Steve says Microsoft shouldn't be down, it shouldn't be down based on the story, but I think they all should be down, or at least need to take a pause based on the fact that these stocks collectively, the mega caps, are up 55% this year.
Okay. I thought we were going to end this one peacefully, but I guess not. Doesn't matter. Doesn't freaking matter how much a stock is up or down. All that matters is valuation. Okay? Look at Google's earnings and look at their valuation. Look at Meta's earnings and look at their valuation. Look at Amazon's earnings and their valuation. Look at Microsoft's earnings and their valuation. The bottom line is all those stocks should have been up big. Meta stock should have exited this week between $335 and $375. Google stock should have exited this week at $145, $150. Mr. Softy should have exited this week probably 5 to 7 percentage points higher than where it exited the week. Okay, so the bottom line is, they're going to be up 1,000,000%. All that it comes back to is valuation. Almost all those stocks are undervalued right now, especially Google and Meta. And what's going on with the earnings? And the earnings are amazing for those companies. And the balance sheets are amazing, and they're ready to weather any storms. You want to throw a recession in it, they'll weather it. It doesn't matter what happens. They'll be fine. They'll make it through, make it out to the other side, and it's all good. Okay, so we'll see how it all shakes out. But I think it did present actually some really good opportunities in these stocks that we hadn't seen for maybe a little bit. But now with how strong these earnings are coming in, and the fact that you get them at much cheaper valuations, that's a perfect scenario, folks. I appreciate y'all joining me as always. If you want to see what moves I was making in the market here today, the brand new stock I bought in the Patreon portfolio, then check out the pinned comment down there and join us in there. I also have a new tier essentially, which has my Become Master Stock Market course inside it as well, my most popular course ever. And if you've been enjoying the Twitch, let me know in the comments section down there. Interested to know how many of you guys are watching over on Twitch. I just started there a few weeks ago, and so far it's been pretty darn fun. So much love and have a great day.